Hey everyone, this is Kirk here again at OptionAlpha.com. Hope you guys had a great weekend. Heading into the short week here for Thanksgiving at the end of the month. Seems like Thanksgiving is coming really late this year, so make sure to stay on your toes with the market changes. Still have some companies that are announcing earnings even this late, and obviously there's going to be a lot of movement here before Black Friday and the real retail season before the end of the year here. I wanted to go over a couple of just a couple quick closing trades that we had last week, and then some orders that we had put in this week as well for new trades that we put on, kind of while the market's a little overextended, just to show you a little taste of what we're doing here on the membership side. Again, if you want to get these trading alerts, you can sign up 100% free for 30 days at optionalpha.com. So last week we had obviously a great run up in the market, and to take advantage of this, we took off some of the spreads that we had put on originally. So you can see here this first order that we took off on the 21st. We took out some MS, which is Morgan Stanley. We had bought a vertical spread, a call spread actually. So we bought the 29.30 call spread for about 50 cents. We closed it out for 80 cents. So a nice little profit there. But again, just making these directional plays on both ends of the market. We have both trades on right now that are going to take advantage of the market moving higher, and we're starting to take those, and we have trades advantage of the market moving patient and wait for our turn to exit the bought a vertical put spread on BAC, the 1714. So we made it a little bit wider. There wasn't as much volume in Bank of America options. So instead of staying with a very short strike price, meaning that the strike prices are close, like the 1716 or 1615, we actually widened it out to about 3 strikes. So the 1714, bought the 17 puts, sold the 14 puts to help finance it, and the end result is we paid $1.28, which is right below kind of the mid price here. The whole idea here is that we just want a nice move in Bank of America down anytime before expiration, and we'll take the profits off. And you'll see that right now Bank of America is really overstretched to the top side. And again, it's not that I know or we see having technicals that are showing this. It's just I think that market mean reversion and the market just making its general ebbs and flows. At some point, Bank of America is going to come back down a little bit, and we're going to have an opportunity to take a profit off the table. Same thing here with Exxon. So we bought the Exxon January options. We went out a little bit further here. Bought the 190. So again, making this a very wide spread. It's about 10 points wide. And we bought the vertical put spread for 422. And so we can possibly make a little over $5 here on this spread. So just one lot on this one, keeping commissions low, but making those strikes a little bit wider to take advantage. Again, same thing here with Exxon. It's not that volatility is really high, that we're selling any credit spreads. We're just trying to take advantage of a quick move down in Exxon anytime between now and January. So you see we gave ourselves a little bit more time to be right. We can ride this thing out. It's basically a 50-50 bet on either side, and we just think that the market's going to move down. So if we actually go to the charts here, this is a look at BAC, and you can see what we mean. We're just trying to take advantage of a market kind of possibly coming down a little bit more than where it is right now. You can see that Bank of America has had a great run up since kind of the beginning part of November, and because of that, we're just trying to take advantage of just a quick move down. It's not a big move that we don't want Bank of America to crash back down to 14. All we're doing is pinning right around the strike price from the other day, and we want Bank of America to trade just a little bit lower. Same thing with Exxon. That was another trade that we looked at. You can see how high Exxon has run in the past couple months. Same deal here. It's not that we think Exxon's going to crash at all. It's just that we're taking advantage of a really overstretched market to the top side, making these high probability trades. You'll notice here in the top left that implied volatility is very low, so we're not selling credit spreads at this point. We're not selling butterflies or iron condors. We're just buying a simple vertical spread taking advantage of possibly a directional move in Exxon. Now in Morgan Stanley, you can see we, again, making trades on both sides of the market. We had a call spread, so as Morgan Stanley and the rest of the market has continued to move higher over the last week, we very happily took our profits on this early. We think that the market's a little bit overstretched, especially in Morgan Stanley. So rather than try to wait it out all the way to expiration and kind of eke out every little ounce of profit, we had a nice profit on the table. We made a great return in the time frame that we held the trade. So again, close the trade out. Don't be a hero. Don't be a rodeo star trying to ride this thing all the way to the end. And then Pandora. Pandora is another one. Since we put the trade on in November, has just had a nice little run up. We actually closed this one out a couple days before Morgan Stanley. But again, nice run up in Pandora. You can see that as it started to get near its earnings, implied volatility started to rise a little bit, stock got a little bit more volatile. So just worked in our favor in that period that we actually closed out the spread. But you can see how low our strikes were originally for this Pandora spread. We were down below here in the low 20s for this spread. So it actually was a very decent spread when we put it on. Implied volatility was high, which helped us out and took advantage of some nice time decay. So hopefully that helps out for you guys. As I mentioned before, some of the things I'll be watching this week are the retail sector and especially XRT. XRT, which is the Spider Retail Sector ETF, has been on a tear for pretty much all of October and November. So we'll see what happens as we start to get some preliminary results from Black Friday at the end of the week. But if I don't hear from you guys soon, happy Thanksgiving, and as always, happy trading.